Guys, good morning. February 14th, 2020. It's Friday. Happy Valentine's. Let's roll. Stocks are up slightly pre-market at the time I'm recording this, guys. And this gives us a super awesome opportunity of a great reversal today, guys. So looks like we're going to be able to short the slight bounce that is happening on obnoxiously light volume. So some of the greatest stuff that we're observing is Expedia is actually up pre-market on a horrible report, guys. It actually literally refused to give any forward-looking guidance. And it is shocking that the stock is actually up. Now, again, it is up on low volume. This positive sentiment is likely to be reversed in Expedia. We witnessed it many times when Expedia in the past, after the earnings report, has jumped higher and then reversed. With that said, it is one of the better trades for today. It is probably going to be easier to short bkng. So in just a second, I'm going to give you specific levels and entries on these. Nvidia is highly bullish sentiment this morning, guys. But notably, Nvidia is reaching pretty much all-time high levels. A couple of years ago, it was trading at a level at 294. At the time I'm recording this pre-market, it's trading at 288, so it's within $6. So ideally you want to wait till it makes another $6 move higher and short it there, buying the 290 puts, because it's unlikely to maintain that level despite of the bullish sentiment. You're likely to see in Nvidia what happened to Shopify. Stock moves higher initially and then it sells off. Therefore, target your entry, not on the call side, but on the put side. Short the bounces. Roku, same story, guys. Now, there is one stock actually dropped after the earnings report that's been in a bearish trend prior to reporting that earnings announcement, and that's ANET. Trade ANET the way we've been trading some of the other stocks, basically that gap down, unable to close the gap, and they continue dropping lower. So basically short ANET on any bounces. With that said, guys, psychological trading clock is at a 0 right now, as the markets seem to be unable to drop going to the close yesterday, but that shift could come rapidly, lightning fast this morning, guys. So expect a quick reversal while everybody's going to be caught right here. And the level of confidence in any drop or crash is right here, the 0. That's where we want to be buying puts, and that's exactly what's happening this morning. Now, one of the most crucial aspects of why you actually want to be highly bearish today is the fact that it is so transparent and apparent at this point that they keep manipulating these numbers. So the retail numbers come out today, and that's something that they don't talk about. I don't know why, but I've noticed this pattern that anytime they report the numbers, and it's been more transparent, like you can go back on all the GDP numbers that's been announced in the last few quarters, you can go through the retail sales, and this is the pattern that keeps repeating itself. So basically, this is what they do. They report a higher number, okay? But then, when the next month the report comes out, what they do is they adjust that number that, let's say, they're reporting today. Next month, they're adjusting that number to a lower number. So when they actually report in the number, it looks good. But if you really dig into it and you look at it, so the number would have not been higher today unless they would have not revised the prior number lower. Hopefully this makes sense, okay, because they've been reporting higher job numbers, but in relation to what? In relation to their downward adjustments of the prior month. So these numbers are as fake as hell, and at some point this is going to catch up. But this retail number is really meaningful, and basically if they didn't do the adjustment, it wouldn't hold. So they had to do it, but if you really look closer, guys, I mean, these consumer numbers, they're horrible. They're horrible. The market should be in the red big time this morning. If anybody's really paying attention to this, there's no reason to be buying the market here at all-time highs, especially, you know, add all these other things that are happening in the world. Like, this is it. This is the top that you want to short the hell out of. So we got a huge opportunity despite of the market not able to break this Thursday bullish momentum, as we've pointed out. Now we got 7 Thursdays in a row where we were expecting yesterday that trend to finally break. It did not break. We still got a move 7 yesterday, but if we keep following this trend every Thursday has been followed by a red Friday, with the exception of one in the last 7 weeks. So we basically assign a high probability of that pattern to play out again. So look for another move 3 or 11 based on what the 13 market moves calendar has been showing us. That's been a very solid trend. So with that said, trade it as 3 or 11, so it's going to look like this. Your idea, any intraday bounce, you want to come in and you want to short that. Retesting of the double top one more time. This is what we're doing yesterday. We're not likely to do that today. The market is opening a couple of points higher. It's about 3-4 points higher at the time I'm recording this. We're expecting the market to drop all the way to 33.48 with a huge follow through on a further drop on Monday, guys. So buy today's puts and buy some puts, especially on the indexes, like on the SPYs that expire, let's say, on Tuesday, so that you would cover that Monday time frame, because Monday could be the drop if we close under 33.50. And remember, that is super important if you're trying to put some huge bearish positions going into next week. Cover Monday and make sure that one condition is met, and that is that the market will close before 4 p.m. today at like a 33.48. Anything under 33.50, okay, is the official break of the trend. ANET, 225, 220 puts at the open, guys. So far, the stock drops, bounces, short any bounce in this thing, buy 225, 220 puts. XPE, short the hell out of it. Any kind of bounce above that, guys, just short it. 125, 126, short it. bkng, on tiny volume, like 300 shares. This huge move, guys, right here, 30 bucks is happening on 300 shares. Short the hell out of it. Buy 1980 puts on bkng. Roku, okay, same thing, short it, 150 puts. The market is about to make a meaningful reversal after the open lower. Yesterday was a market move 7. If you combine the pre-market data, we can really assign a move 4, because we were opening quite a bit in the red, but then erased all the losses for the day. So with that said, that is a move 7, guys. 2-day sequence 7-7. Now there's something dramatic happens right between these 2 7 moves that is definitely something we should be paying attention to. If you overall combine these things and combine what's going to happen today, you really are getting, if you combine the aftermarket and pre-market data, you're getting 2 move 11s back to back. So we're getting some bullish action when the market is open on lower volume. But if you look at the bigger picture of what's going on, you have this continuous top being formed here, and it's about to unwind, guys. So this is what we've been waiting for. This is the opportunity to buy some puts at cheap prices and freaking take your account 5x in the next few days, okay? 11, 8, 11, 7, 7 sequence basically points that every time we're hitting the top, there's a sharp sell-off comes in, sharp sell-off. So expect one of those today. Next market move we're expecting for today, guys, is 11 or 3. VIX yesterday, despite being low numerically, it does finish higher in relation to the prior close. That actually is indicating a possible beginning of an uptrend on the VIX. So with that said, guys, what you want to do is you want to short the bounces. Despite of the market being bullish so far, expect a much bigger move lower. So buy puts at the open, buy puts at 10.15 and 2.15. Let's rock, make it an awesome day. I'll catch you on the next trade soon.